Jelena, welcome. We're so pleased to have you joining us from London. You were recently interviewed by the BBC, and now you're speaking with Rock the Street Wall Street students. We're very interested in market trends, which we'll come to in a moment. Morningstar is known for independent thinking and long-term perspective. Let's start with your current role. Can you tell us about being a senior equity analyst?
Hi, Ashley. Thanks for having me. I'm happy to talk to all of you guys. So, as a senior analyst at Morningstar, essentially leading luxury company research for the firm. So, in this capacity, I identify which companies in the luxury sector are best to invest in for long-term investors, which strategies and market trends shape the industry. I also share these findings with various stakeholders like the media and like my clients. And I also supervise and help grow junior analysts.
That's so exciting. I also am interested to hear a little bit more about how you help grow those junior analysts because we have so many young professionals as well within our network.
Yeah, so I think growing talent is a lot about empowering people. So I try to, as you grow yourself in your role, there are some things that you are not no longer finding challenging anymore. So I'm happy to cede more ground to my juniors on the team so that for them it's a challenge and for them it's a step up. And for me, it's, managing them and helping them develop. It's another challenge for me as well. So it works both ways.
One of the things we talk about with our students is that mentorship doesn't always have to be in an official capacity, right? And so helping them in different ways, and maybe it looking a little different than what they consider to be traditional mentorship, I think is really something key. What are ways that you show that you are helping to grow them in talent? Like how do they know that they're in that partnership with you?
Yeah, so they also contribute a lot to the work that I do. So it's really about the teamwork. But other than that, I encourage reading my publication on LinkedIn, the ideas I share. Sometimes I just give them advice kind of randomly, just they come up and say like, I might give you a little advice, like it's fine if you don't want to take it, you shouldn't. But yeah, it's reaching out, it's just discussing ideas, sometimes just bouncing ideas off each other. I think it's immensely helpful. That's how my early mentors in my career have worked with me. And it's how I try to work as well. You just like it's a conversation, right? And like it adds value on both sides.
That's wonderful. Just like other relationships. I'm sure within your role, you must pay very close attention to market trends. And there's a lot going on in the world and from a political realm, an AI realm, the climate. So, what are trends that you are seeing right now?
Yeah, so the ones that you mentioned are probably at the top of the mind, right? And in terms of what's happening, what's different, probably AI is the most, intriguing now from both perspective of risks, but also opportunity. What is interesting, though, from an investor's perspective, there is no way of telling how this trends will impact the long term, right? So that creates a lot of dislocations and mispricing in the capital markets. So typically, investors tend to follow whatever is growing, whatever is hot, and that creates overvaluation. So investors have to be really mindful of that. From my perspective, I don't think that my crystal ball is better than anybody else's. So I prefer to invest in companies that might benefit from some trends, might not lose massively, of course, but I wouldn't bet on something that is fully and only exposed to a trend like AI because I'm more wary of the valuations.
That's very interesting. So, can you give us an example of how you use market trends to inform your process whenever you're going through? You started giving us a glimpse of that, but just share a little bit more about how you actually use that within your process.
Yeah, so I think the tariffs and related sell-off in April would be a good example. So there, with the market selling off, it's a very stressful time for investors, obviously. But first thing for me to do was basically to look at the companies, first of all, the exposure, then, the direct impact of the tariffs, then how those tariffs could be potentially offset, both in pricing. Some companies have stronger pricing, some have weaker pricing. Then also in shifting the manufacturing and how fast that could be done. So that would be, direct impact. The second is indirect impact. And for me, kind of the direct scenario would be kind of global decoupling and as a result, slower economic growth. So from my perspective, it was possible. It was not extremely likely, given that tariffs are not set in stone. They can be negotiated. Also, there are political changes in terms of election cycles that could come to fore as well. So from my perspective, I found that there are many companies with strong pricing power, good business models that have sold off excessively during those times, and that presented an opportunity.
Yeah, you shared that there's pieces of relationships that are involved in your job. So when you're cultivating those relationships with a range of clients, from asset managers to sovereign wealth funds and family offices, how do you tailor your approach to such a wide range, such a wide group?
Yeah, so I think the best thing to start with is the good alignment of goals and also of way of doing things. So with Morningstar, we are focused on long-term investing and on quality of the business models. So that is very much aligned with investors that we tend to have. So we don't have a lot of clients that kind of trade very often. So that is the first step to kind of, you cannot be everything for everybody, right? And you have to pick your client as much as they pick you. Another thing is that, I tailor my communication to the client needs. So some clients prefer just to have an industry overview and they make their own decisions about investing in certain stocks. Some need stock recommendations. Some just need a contrarian view to whatever their thesis is. Some are more knowledgeable, some are less knowledgeable. So I try to tailor my communication accordingly.
You mentioned that long-term piece, and we at Rock the Street Wall Street are all about empowering investors through education. Is something that we deeply value. So what skills or qualities should students develop today for a financial career?
Yeah, that's a very good question. So first of all, I would say intellectual curiosity and asking good questions, especially in age of AI. Information is so available and so easy to aggregate. However, you have to actually understand what you're looking for to find what you're looking for, right? So
I love
wherever
that.
you're asking a question to a CEO of the company or ChatGPT, it's the same. Asking good question is one. Another thing is really emotional setup is very important, just as important as intellectual setup, in my view. So trying to manage your emotions when markets go against you, not fall in love with the stock ideas that you have. Also put things in perspective and don't link your self-worth to your investment successes. I think it's very important to help kind of maintain the clear head and cool head. And finally, I would say be a clear and succinct communicator. That's also very important.
That's very powerful advice. I mean, starting with just asking good questions is incredible. And there, as you pointed out, so many applicable, pieces of that not only would go through their education, but also as they enter into the workforce. And keeping that clear mind and being an excellent communicator, I can't tell you how many people I've been able to work with because they were a good communicator, even though we had very different skill sets as a whole. So that's very powerful advice. Finally, if you could share one message with our Rock the Street Wall Street students, what advice would you have possibly given your younger self or would you give them?
I would say start investing early. I started a bit too late. I tend to overthink things. Don't be afraid of failure. Failure is a part of the process. It's not the end of the world.
I one of my favorite things is compound interest, so I couldn't agree more. I also wish that I was investing earlier. Well, this has been very insightful and inspiring, Yanela. Thank you so much for sharing your experience and helping our students to see how global thinking and curiosity can really open doors in finance.
Thank you.